Okay, so my name is Mensa Isaac. We are going to solve another question on single entry and incomplete records. Good. So with this question, we said Efia Rambo started a retail shop 3 years ago. Efia Rambo does not keep proper accounting records, and the income tax authorities have requested that she submits proper records for her income tax assessment. Good. So Efia Rambo revealed that the following receipts and payments were made by her in the year 2021: motor expenses, rent paid, sundry expenses, wages and salaries, cash paid to suppliers, cash received from debtors, advertising expenses, rates. Good. Efia Rambo is certain that apart from some drawings made from cash received, all receipts and payments have been recorded. Good. So apart from the drawings he made from the cash received from debtors, every other payment and receipts regarding the cash book has been recorded. So that means that with this question, the difference we will get in the cash book is the cash drawings, because that's the only thing that has not been recorded. Good. So you also discovered that she withdrew goods which cost 500 from the business for her friend Chairman to me as a birthday present. So that's the goods drawings, which is going to show in the income statement. Good. Discounts allowed to customers amounted to 1,020, and discount received was 770. So that means that discount allowed is going to be shown in the debtors control account and in the income statement. Discount allowed to customers. It's going to show to the income statement and debtors control account. And the discount received was 760. It's going to show in the creditors control account and also in the income statement. Customers returned 40 goods worth 2,500. Also, so that means that as a sales returns, right? So it's going to show in the debtors control account. Also, 1,250 worth of goods were returned by the business for wrong color. So that means that we return goods. So purchases returns, we purchased and we returned it. So it's going to show in the income statement and in the creditors control account. Good. The assets and liabilities of the retail business in the year 2021 are given below. December 21 is on the debit side, January 21. So that means that January 21 is our balance BD and the December 21 is our balance CDs. Good. We are required to prepare a statement of profit or loss for the year ending December 2021 and a statement of financial position as at that date for Efia Rambo Enterprise. Good. So we are going to start with our statement of financial position. As you already know, we'll compute for our statement of financial position as at the start of the year. Then we'll compute for our debtors control account to get our credit sales. Then we'll compute for our creditors control account to get our credit purchases. Then we'll compute for our cash book to get the cash drawings that the partner didn't record. Okay. Then we'll come straight to our income statement. Then we'll also draw our balance sheet. Good. So with this question, it entails all the items that we have to open. So we are going to start with our statement of financial position. Statement of affairs, sorry. Assets, January 21st, January 2021. Good. So we know that for statement of affairs, for the start of the year, we are going to less our liabilities from our assets. So assets minus liabilities to get our opening capital. And this is very simple to prepare. So we'll come here, we'll list all our assets we have in the question. So we have motor vehicle, 10,100. Motor vehicle. 10,100. Also, we have furniture and fittings to be, we are listing our opening balances. So the furniture and fittings is 5,600. Then we have any other assets here. We have stock in trade, stock, which is 3,750. Then we have our sundry debtors, our debtors, which is 2,570. Good. Then we have our rates prepaid. We know that expenses prepaid is an asset, current asset, so it falls under the assets. So rates prepaid. So we have 100 for rates prepaid. We have cash, cash, which is 2,350. 2,350. Good. So we check if there's any assets again, and that's all the assets we have in the question. So close our total assets. We'll add them together and we are getting 24,470. Good. And that's all for the total assets. So these are total assets. Good. Then we come to our liabilities. Okay, so we are coming to list our liabilities, add all our liabilities, and subtract it from our total assets to get our opening capital. Good. So with this question, we have our liabilities to be wages accrued and sundry creditors. So sundry creditors, which is 875. So we are using opening balances, don't forget. We are finding our opening capital. We have wages accrued, which is 220. When we add this together, we are getting our liabilities, and our total liabilities, total liabilities is 1,095. So this total liabilities minus our total asset is what we'll name as our opening capital. So the total liabilities minus, or we less our total liabilities from our total assets, and we are getting opening capital to be 23,375. So this is our opening capital. Good. So that's our opening capital. So we are done computing or drawing up our statement of affairs, and we do this to find our opening capital, and we've written it. So now we are going straight to find our cash balances or the cash drawings in. So we do this by drawing up our cash book. Okay, we want to find our cash drawing because the question says apart from some drawings made, all other receipts and payments were recorded. So the difference we get, because you already have a cash balance BD and a cash balance CD, so the difference is going to be the drawings the question is talking about. So draw up our cash book. We have our debit side here, our credit side here. Good. We'll start with our date, details, and Ghana cedis. Good. So good. So we'll come to the question and list our items. So we'll start with our balance BD for cash, and we know that the balance BD for cash is 2,350, right? And we know assets, cash is an asset, and it's going to have balance, a balance of balance at the debit side. It's going to have a debit balance, and our balance BD will be here. Balance BD 2,335, 2,350. Good. So any item there, we have our motto. We have our motto. Sorry, expense. Yes. So our motto expense. So we are just going to list the items made by cash or our receipts and payments. So we have 1,200. So someone will ask, why are we recording the motto expenses here? We are recording them here because the items that will increase our cash balance or the amount of cash we have on ourselves or the business, the amount the business has is going to be recorded here. So any amount that is going to increase our cash balances will be recorded here. And any amount that is going to decrease our cash balance, the amount of cash we have, is going to be recorded at the credit side. Good. And we know that for expenses, when you are making expenses or paying an expense, money will be going out and your cash in hand will be reducing. So any expenses that we see will be recorded at the credit side. And you know that motor expense is an expense, and we have rent paid. We paid rent, so our cash is going to definitely reduce. So rent paid is 500. We have sundry expenses to be 800. Expenses is reducing our cash balance. So sundry expense is 800. Good. We have wages and salaries. Wages and salaries, which is 4,000. Good. We have wages and salaries, which is 4,000. We have cash paid to suppliers, which is 27,800. So cash paid 27,800. Good. Then we have cash received from debtors. Okay, so we are receiving cash. It's going to increase our cash in hand. So cash received from debtors. So any item that is going to increase our cash balances will be recorded here. And the amount for cash received is 37,650. Yes. Advertising expense. Advertising expense is an expense. Okay, so it's going to decrease our cash in hand. So advertising expense 1,450. We have our rates to be 1,400. Okay, so that's the rates to be 1,400. So we also have our balance CD. Our balance CD for cash. So we had a balance CD of 1,650. Okay, 1,650. you know that for cash drawings, it is definitely going to appear here. And if you check these amounts, this place will be greater than this side. So the cash drawings is going to be found here. You are making or taking out cash. So your cash is reducing. So therefore, any item that will reduce our cash balances will be found here. So when we compute for these total amounts, we could see that this side is greater than this side. So we'll get our total here. So the difference that we get is definitely going to be our cash drawings, okay? So we have our CD already, so the difference is not going to be a balance CD. But as the question said, apart from cash drawings, every other receipt and payment was recorded. So the difference we get is the cash drawings. Good. So the total for the debit side was 40,000. So since here is 40,000, we are going to record the bigger side at both sides. 40,000. So we'll add all these and less it from this to get our cash drawings. You get it? So when we add all these and less it from this, what we will get is our cash drawings. So our cash drawings is going to be 1,200. 1,200. Good. So with this cash drawings, it's going to show in the statement of financial position. Good. So we move on to, now we've gotten our cash drawings as the question says. So this is why we made or opened our cash book to find the cash drawings that the owner or the sole proprietor didn't record. So now we have it, and we've computed for our statements of affairs. We've computed for our cash book. Now we move on to compute for our debtors and creditors control account. Good. So the balance BD is still going to be the CD there. So we have 1,650. So as I said, we are going to prepare our creditors and control account. We are done with statement of affairs. We are done with preparing our cash book. So now we move on to prepare our debtors and control debtors control account to get our credit sales, and also we will open or prepare our creditors control account to get our credit purchases. Good. So let's move on. So we open our debtors control account. Debtors control account. Good. So we will check for our balances BD for debtors. And we know that our balance BD assets has a debit balance. Our balance BD for debtors was 2,570. 2,570. So that's going to be shown at the debit side. Then we check in the question, it says cash received from debtors. Okay. That was Efia reviewed that the following receipts and payments were made by her in the year 2021. We could see some cash received from debtors in the question. That means that we received cash from our debtors. So it's going to what? Decrease the amount the debtors owe us. Okay, therefore it's going to be recorded at the credit side. So cash received, which is 37,650. 37,650. Good. Then we'll check for any other debtors amount again. We have discounts allowed to customers amounted to 1,020. Okay, so we allow discount to customers. So if customers were to pay 1,000 cedis for the amount, we allowed a discount to them, and let's say the discount we allowed was 500, or let's say 100. So if we allowed 100 discount to them, now they are going to pay us 900. That means it's reducing the amount they will owe us, right? So any amount item, now we reduce the amount to be recorded here. So discounts allowed to customers will be recorded here. So discounts allowed will amounted to 1,020. Sorry. Then we have sales returns. Yes, customers return 40 goods worth 2,500. Okay, we are just looking for debtors, any debtors items to record. So customers return 40 goods worth 2,500. So if we made sales to them, okay, and we made sales to them. Now they are owing us amount of, maybe we made a sale of 1,000 cedis to them. They are owing us 1,000 cedis. Then they brought those goods to us again. Are they owing us anymore? No. So the amount they are owing us is reducing. Yet they owe us no more. So therefore, the sales returns items will be here. So the sales return was 2,500 for sales returns. Good. So we'll check for any other debtors amount. We have cash received from debtors. We have discounts allowed for customers, sales returns. So we'll just come and look for our balance CD for the debtors in the question. And our balance CD for the debtors was 3,570. 3,570. So that's our, yes, 3,570. So that's our balance CD for the debtors in the question. Good. So with this, we can see that we recorded any item pertaining or regarding to the debtors control account. So any other difference that we get is going to be our credit sale, because that's what we are looking for. We have our balance CD. Normally, the balance we get has to be a balance CD, but we already have it. So the difference, the reason why we are opening this to get our credit sale, obviously. So we check for the bigger side. We know that obviously this side is going to be greater than this side. So we record the total of this side at both sides. Okay, and we are getting 44,740 for the total. 44,740 for the total. And the difference we know is going to be a credit sale. So we are going to less this amount from this amount to get our difference, which is going to represent the credit sale. And when we do that, we are going to get 42,170. Good. So this is our credit sale, and we are going to send this into the income statement. We are just going to repeat our balance CD. We'll bring it forward. So our balance BD is going to be the 3,570 here again. So we are done computing for looking for our credit sale. Now we have to look for our credit purchases. So we'll open our creditors control account. So our creditors control amount. So we'll just look for our balance BD of creditors. And we know that in the question, our opening balance for creditors was 875. And since we know that creditors has a credit balance, we'll call it at the credit side, and we are having 875 for our balance BD. Good. We check for any item relating to creditors control. We have cash paid to suppliers. Cash paid to suppliers. So in this creditors control account, as I already said in the last video, any item that will increase the amount we owe them is going to be recorded here. So any item that is going to reduce the amount we, the business, owe our suppliers is going to be recorded here. So if we've paid cash to our suppliers, we owe them, we've paid cash to them, it's going to reduce the amount we owe them. So the cash paid to suppliers will be recorded here. Cash paid. So we have cash paid amounting to 27,800. Gives any item relating to creditors control account. We have discount received of was 770. Okay, so discount received was 770, and we know that when we receive discounts from our suppliers, as I said, for discount allowed, we are owing them 1,000. They've given us a discount of 100. So now you have to pay them 900 instead of 1,000. So the amount we are owing them is now what? Reducing. So discount received is going to be here. So now we have a discount received of 770. Good. Then we look for any item relating to our creditors control account. We have customers returned 40 goods, that's for the debtors, 2,500. Also, 1,250 worth of goods were returned by the business for wrong color. So we return the goods to our suppliers. So if we went to buy the goods on credit and now we are owing you, and now we return the goods to you, that means that the amount we owe you is now no more, or it has reduced. If the amount we owe you has reduced, then we have to record it at the debit side. So the purchase returns is going to be recorded here. So we have our purchase returns here, and the amount for purchase returns is 1,250. 1,250. Good. So now we'll check for our balance. We are done recording any item relating to creditors control account. We'll check for our balance CD for creditors. And we have the balance CD to be 1,240. Balance CD to be 1,240. So with this, we know that this side is greater than this side. So we'll close it and show the total reflection of the amount at both sides. And when we add these amounts, we are getting 31,060. 31,060. Good. So we do this to find our credit purchases. We have our CD. So the difference is not going to be CD. We are going to get the difference with credit purchases. So we are going to less this total that we've got. We are going to less this from this to get the difference for credit purchases. So the difference for credit purchases, we will get 30,185. 30,185. Then we are done computing for our credit purchases, and the normal way as we do, the balance CD will come here as balance BD. Then we have 1,240. Good. So that's all for the creditors control account. We have calculated or found our opening capital by preparing our statement of affairs. We are done computing or finding our cash drawings with the partner. There's partner or sole proprietorship didn't record. Then we are done looking for our credit purchases, which the partner didn't record, which we should send to the income statement. We are also done with preparing finding our credit sales, which we send to the income statement. So now we are going to prepare our income statement for the business. Good. So we did all these debtors and credit control account to find our credit purchases and credit sales to compute our income statement. Good. So statement of profit for the year ended December 2021. Good. So, as we know already, we are going to start with our sales. So, our sales, the sales we had in the question was 42,170. we already computed for our credit sales. So that's what we've just shown here. And you know that the normal format will list our sales returns. So we'll check if there's any sales returns. So the question said customers return goods worth 2,500. So sales returns is 2,500. 2,500. So what are we getting for our net sales? 39,670. Good. That's our net sales. Good. Then we'll less our cost of sales. So in the question, our opening stock was 3,750. So we just show it here. Opening stock 3,750. Then we'll check. We already computed for our credit purchases, and the purchases we had was 30,185. Good. So we'll check if there's any purchase returns, carriage invoice, goods drawings. So we just check for these items. Yes, there was purchase returns. The business returned some goods. So purchase returns. So the purchase returns was 1,250, which we are going to less from the purchase amount. We have goods drawings too. Goods drawings, which was 500. Good. He withdrew some goods, so we'll show that. So we'll compute for this amount, and we are going to get 32,185. So that's our cost of goods available for sale. Good. 32,185. Then we'll less our closing stock, as you already know. Our closing stock. And our closing stock is 4,570. So 4,570, and we are getting 27,615. 27,615 for our cost of goods sold. Good. So we subtract this from this net sales to get our gross profit. 27,615. We subtract from this to get our gross profit, and our gross profit here is 12,055. So this is our gross profit. Good. Then we'll check if there are any other income. Okay, you just go and check if there are other income in the question. And in the question, we saw that there was a discount received from suppliers. Okay, so the discount received amounted to 770. So discount received 770. 700. So let's show the true to add other income. So discount received 770. Good. So with this, we are going to get 12,825. 12,825 as our total income. Good. So this is what we are getting for our total income. All right. So we are going to continue from the total income and less our expenses. Okay. We are going to continue from the total income and less our expenses. So our total income here is 12,825. Good. So now we'll come to less expenses as the format says. Good. So we are starting with our expenses. So obviously we'll go and check for our expenses, and the expenses was most of the expenses was found in the cash book. Okay. So we have discount allowed as an expense. We allow discount to customers. Discount allowed, which was 1,020. So we have other expenses like sundry expenses. Sundry expenses, which is 1,100. Okay, we have wages and salaries. Wages and salaries, which is 4,100. So we are just listing our expenses, okay? We are just listing our expenses in the question. We have rates, which is 1,350. 1,350. So we are just listing motor expenses. Motor expenses. We have 1,200. Good for motor expenses. We have rent paid. Rent paid, which is 500. 500. Good. We have advertising. Advertising, which is 1,450. Okay, so we have no expenses at the receipts and payment side again. We check if we have any other expenses again. Good. So we could see that the assets and liabilities of the retail business in the year 2022 are given below. Below those sentences, we have motor vehicle and furniture and fittings. You could see that from January 2021, the asset was valued at 10,100, but at December 2021, it was valued at 10,000. That means that this asset depreciated with an amount of 100 cedis. You get it? 1st January 2021, it was 10,100. And when the year ended, it was 10,000. So that means that the depreciation the motor vehicle attracted or accumulated was 100 Ghana cedis. And we also have furniture and fittings, which is 5,600 at the start of the year, but when the year ended, it was valued at 5,400. So the depreciation of this furniture and fittings is going to be 200. Do you get it? So they reduced in value, and that's an expense. So the depreciation will also come as an expense. The depreciation for motor vehicle is going to be 100 cedis. And we have depreciation for furniture and fittings, which is also 200. So the 5,600 minus the 5,400 it reduced in value and the difference was 200. And this one too, it was 1,100 and it reduced in value and the value at the end of the year was 10,000. So the depreciation was 100 cedis. So that's all for our expenses. So we check through if we have any expenses again. And I think there's no expenses again. And that's all for our expenses. So we are going to add all these expenses to get our total expenses. Then we'll less our total expenses from our total income. So when we add all these together, we are going to get 11,020. 11,020, and this is going to be our total expenses. Okay, so we are going to less this total expenses from our total income. We are going to less this total expenses from our total income, and we are going to get our net profit. Okay, so we are going to get our net profit. So our net profit is going to be 1,805. 1,805 for our net profit. So this will be all for our income statement of profit or loss. So is this net profit that we'll send to the statement of financial position to find our balances? Okay, so we'll proceed to the statement of financial position. Okay, so with our statement of financial position, we already know the format. Statement of financial position is it as at 31st December 2021. Good. So for our non-current assets, we have only two non-current assets in the question, which is the motor vehicle and the furniture and fittings. So we have our cost here, we have our accumulated depreciation here, we have our net book value here. So we have motor vehicle here. And the cost for motor vehicle when the year started was 10,100. Good. And the depreciation is obviously 100. And when the year ended, it was 10,000. So we're just showing the true reflection of what happened to motor vehicle. Good. So we are going to furniture and fittings. Furniture and fittings. So furniture and fittings was 5,600. It attracted or accumulated a depreciation of 200, and the net book value was 5,400. Good. So these are the only non-current assets we have in the question. So we are going to add these together. We are going to get 15,700 here. We are going to get 300 here. And we are going to get 15,400 here. Good. So we are going to proceed on to the current assets. Current assets, which you know inventory is starting. Stock, it was named stock. The stock is starting. Then we know for our stock is the closing stock that is going to be recorded, and the closing stock was 4,570. 4,570. Then we'll check if there's any current assets again. We have debtors, which is 3,570. That's our ending balance for debtors. 3,570. 3,570. Good. So we have, let's check if there's any current assets again. We have rates prepaid. Rates prepaid. We know that for expenses prepaid, they are always current assets. So our rates prepaid is going to be 150. So let's check if there's any current assets again. We have cash. Cash. We are recording. It's for the year ending 31st December 2021. So everything we are recording is regarding to the year ending for that year. Okay. So this is what we are going to use. We didn't use the start of the year for the non-current asset, but we are going to use the ending balances to continue our computation. So we are just recording the ending balances in the balance sheet. Good. So the rate we paid was 150, and we have our cash. Our cash, when we computed for cash, you can see that we had a balance of the cash drawings to be 1,200, and the cash balance carried down for cash was 1,650, which is already in the question. So we just write the 1,650 there. The 1,650 there. We are just carrying the balance CDs into the balance sheet. Good. So there's no current assets in the question again. We'll just compute for the total, and we are getting 9,940. 9,940. Then we'll go straight to our current liabilities. Our current liabilities. Good. So with our current liabilities, we have creditors. Creditors to be 1,240. 1,240. Then we also have sundry expense owings. Sundry expense owings should be 300. Good. We also have wages accrued. Wages accrued should be 320. Good. So these are the only items falling under current liabilities. So we are just going to add these current liabilities, and we are getting 1,160, 1,860. So we are going to less this amount from this amount to get our working capital. And what's our working capital? After lessing this from this, we are going to get 8,080. 8,080. Good. So with this, we'll add this to our non-current assets, and we are going to get 23,480. Good. So this is our net assets. So we will first of all write our opening balances for the non-current assets, then the depreciation will come, then the ending balance for which you are going to work with will come. Then we will list all our closing balances of items. We know stock was this, debtors, rates we paid, cash. So these are the closing balances. Then we'll come to our current liabilities. We'll add them and less from the total of the current assets. Then we are getting our working capital. then we add this working capital to our non-current assets, then we are getting our net assets. So with this net assets, after computing or drawing up our finance by, we should be getting this amount to show that we've already or completed the work. So we'll go to finance by. With the finance by, we are going to start with our capital, which we've already worked for. That's the opening capital. So that's the opening capital. So we had a net asset of 23,480, right? So whatever we get should be equal to this. So because the board is too small, I've cleaned the board to continue with the finance by. So finance by. Good. So capital we got was 23,375. 23,375. Good. So we had a net profit too. So net profit of 1,805. 1,805. Good. We had drawings, okay? We had drawings too. Drawings too. You see, the question said, apart from any receipts, apart from some drawings, any other receipts and payments was what recorded. So we used the cash book to find our cash drawings, which we had 1,200. And when you check the question too, it says customers returned. The owner withdrew some goods amounting to 500. Okay, the owner withdrew some goods amounting to 500 from the business for her friend chairman to me as a birthday present. So you are going to add that cash drawings to the goods drawings to get our total drawings. So that's what we will less from this amount. Okay, so 1,200, which is the cash drawings, plus 500, which is the goods drawings, we are going to get 1,700. 2,700, which is our drawings. Good. So we'll add these together. We'll add these and less this. And what are we getting? We are going to get 23,480. 23,480. So this is all for our statement of financial position. At the end, our owner's equity, which is this amount, was equal to our net asset that we already computed. And this is the continuation. So we should get 23,480, which we've gotten. So we could say that we've gone through the right procedure to get our good and final answer. So this is all for the statement of financial position. So this is the solutions to the question. You first have to find your statement of affairs to get your opening capital. You find your cash book. You draw up your cash book if there was any cash transactions made in the question. You open your debtors control account. You also open your creditors control account to find your credit purchases. You open your debtors control account to find your credit sales. So with this credit sales is what you are sending to the income statement. With that credit purchase you get from the creditors control account is what you send to the income statement to compute your net profit. With that net profit you send to the balance sheet at the finance by, and you are getting your totals to be balancing. So this is all for now for the single entry. The name is Mensa Isaac. See you in the next video. Thank you.